1 out of every 2 employed Americans works at a small business. 7 out of 10 of every, 7 out of 10 new job opportunities are created by small businesses. When the federal government issues new rules or raises taxes or threatens to raise taxes or increases health care costs or prolongs a sense of uncertainty, this doesn't just impact the name on a storefront, it impacts real people. It impacts every American worker that puts a roof over their head or food on the table by working at a small business. We've heard some say that our economy has recovered, and it has somewhat. But when you look at the number of unemployed Americans and the number of those who may be employed but can't find full-time work, in other words, they're working only part-time, it's clear that we are not where we should be. As testimony today will reinforce, it's not another sweeping government program that will make life better for Americans who depend on small businesses. The answer is hidden in the thousands of pages of regulations and tax policies that are crushing the small business community. We must alter the mindset of the federal government so that it is always thinking about how its actions will impact our small businesses. That's what the Regulatory Flexibility Act, for example, the Improvements Act, was all about, requiring that all federal agencies consider the impact, both direct and indirect, that new rules or regulations will have on small businesses before we pass these laws. And on another area, the labor force participation rate is at its lowest point in our history. The percentage of long-term unemployed is still much higher than before the recession. And maybe the most disturbing trend, every year of the Obama administration, we've seen more businesses close than doors open. And that's something I think we really need to focus some time on. More businesses closing, dying, than opening or being born. Economists describe this as the number of business deaths exceeding the number of business births. And in plain language, it means we have a problem. Small businesses are the foundation of our economy. As a committee, we are here to make life better for small businesses and the working families that rely on them. Today, we begin that important work. I want to thank each of our witnesses for taking the time to be with us today, and I look forward to hearing each of your testimony and asking some questions. And I would now yield to the ranking member, Ms. Velasquez, for her making an opening statement.
Thank you, Mr. Chairman, and thank you for holding this important hearing. Creating 2 out of 3 net new jobs, small businesses are vital to our economy's overall economic health. Recent job data affirms this point, with small firms creating 78,000 jobs between December and January, significantly outpacing larger companies. In January, businesses with fewer than 500 employees added 81% of new private sector jobs. Over the last 4 months, smaller companies have been responsible for 83% of newly created positions. When compared to the 38% of new jobs small firms created in 2010, it is clear that the small business sector is finally firing on all cylinders and providing the fuel to power our economy forward. For small businesses to grow, a number of ingredients must be in place. Access to affordable capital is one element, whether it is a bank loan or a well-timed infusion of venture capital. Small companies require capital to expand their operations, break into new markets, or launch new products. Thankfully, since the end of the Great Recession, the lending environment for small businesses has improved considerably. The majority of small firms that applied for credit in 2014 receive it, according to data from the Federal Reserve Banks. Indexes that measure credit conditions for small companies reached record levels in the last quarter of 2014. Despite this positive news, room for improvement remains. Smaller loans are still well below pre-recession levels. Those smallest businesses or startups who are just getting off the ground continue encountering difficulties in securing credit. It is my hope the committee will focus on this issue in the coming weeks. Beyond access to capital, in order to succeed, small firms need customers willing to purchase their products. There has been significant progress in this area as well. Consumer confidence has been climbing since June, peaking at an 11-year high in January. With fuel prices remaining low, it is anticipated that consumer spending will remain strong, providing demand for small firm goods and services. All of these factors suggest that our nation's entrepreneurs have made significant progress in recent months. As small business continue growing, expanding, and adding workers to the payrolls, they will help strengthen our overall economy. It will remain the function of this committee to support policies that foster this growth. In that regard, I look forward to working with the chairman and all my colleagues to continue our bipartisan work to strengthen the small business sector. I just want to take this opportunity to thank all the witnesses for your valuable insight, and I yield back the balance of my time, Mr. Chairman.
Thank you very much. The committee members can submit opening statements for the record if they would like to do that. And I'd like to go ahead and introduce our panel at this time, as well as introduce some of our 5-minute rule, which is basically you get 5 minutes to speak to us. We hold ourselves to 5 minutes as well. We even have a lighting system for that purpose. Green light will be on for 4 minutes. Yellow light comes on, lets you know you got a minute to wrap up, and then the red light will come on. We'd ask you to, tie it up at that point, if not earlier. We'll give you a little leeway, but not too much. We'll introduce the panel, and then we'll hear from the panel. We'll begin with John Clifton, who's a partner at Gallup, Inc. In this role, Clifton manages Gallup's global government work and the Gallup World Poll, an ongoing study conducted in more than 160 countries, representing 98% of the world's adult population. He received his bachelor's degree in political science and history from the University of Michigan and a Juris Doctorate from the University of Nebraska. We welcome you this morning. Our second witness will be Ms. Cynthia Kay, who is owner and president of Cynthia Kay and Company in Grand Rapids, Michigan. Her company produces high-quality media productions and communications elements that are used here in the United States and abroad. Ms. Kay serves on the board of MyQuest Foundation, whose mission is to promote a culture of entrepreneurship in Michigan. She serves on the executive board of the National Small Business Association, whom she is representing today. A graduate of Michigan State University, got a lot of Michigan folks here. Ms. Kay also holds a master's degree in communications from Western Michigan University. And our third witness will be Mr. David Burton, who is a senior fellow in economic policy at the Thomas A. Rowe Institute for Economic Policy at the Heritage Foundation. In this role, he focuses on tax matters, security law, entitlements, regulatory, and administrative law. He received a Juris Doctor degree from the University of Maryland School of Law, and he holds a Bachelor of Arts degree in economics from the University of Chicago. So we welcome all three, and I will now yield to the ranking member to introduce our fourth witness.
It is my pleasure to welcome Ms. Elana Fine. She is the Managing Director of the Dickman Center for Entrepreneurship at the University of Maryland's Robert Smith School of Business. Ms. Fine's primary focus is leading the center in its mission to broaden entrepreneurship. Her responsibilities include oversight of a venture incubator, an angel investor network, business competitions, and integration with Smith School entrepreneurship curriculum and research activities. She's also an adjunct faculty member and has an MBA from the University of Chicago. She was recently named a Tech Titan by Washingtonian Magazine. Welcome.
Thank you. Mr. Clifton, you're recognized for 5 minutes.
Thank you, Mr. Chairman and members of the committee. It's a pleasure to be here to discuss Gallup's analytics on the state of the U.S. economy, attitudes of small business owners, and the current barriers to job growth and startups. Gallup completed its first national representative survey of the world in 2006. Our biggest finding from this study is what the whole world wants is a good job. That finding compelled us to more thoroughly study the jobs situation around the world. Gallup now quantifies the prevalence and quality of jobs in more than 140 countries each year, and Gallup also tracks employment daily in the United States, surveying roughly 30,000 adults per month and more than 350,000 people per year. There are a number of signs from Gallup's data that the U.S. economy has been improving since the recession. Economic confidence is improving, self-reported discretionary spending is steadily increasing, and people are reporting that hiring is outpacing firing in their workplaces. Despite this encouraging news, job creation remains a problem. While official unemployment has fallen from roughly 10% in 2010 to roughly 6% today, using this metric to represent the total jobs picture would be misleading. Traditional unemployment includes only people who are looking for work, who are available for work, and who have not worked a single hour in the past week. This means that if a person is giving up looking for work, or if a person has worked only a single hour in the past week, that person is not considered unemployed. A different metric offered by Gallup quantifies the number of people employed full-time for an employer, or what others might call a good job, as a percent of the total adult population. Known as payroll to population, this metric stands at 44.3% today and has not meaningfully increased since 2010, when we started quantifying this metric. One of the main reasons that the job situation has yet to recover is that according to the U.S. Census, the number of business deaths now exceeds the number of business births among employer firms for the first time since 1977, when this measurement began. This leads us to the importance of small businesses and startups in this country. They contribute roughly 70% of all new jobs created in a single year. Considering their importance, Gallup works with Wells Fargo to track the opinions and behaviors of small business owners on a quarterly basis. The good news is that the attitudes of small business owners are steadily improving. The Wells Fargo Gallup Small Business Index stands at plus 71 today, which is the highest index score since the onset of the recession. Now, 64% of small business owners report that their company's current financial situation is good, and 71% expect their company's financial situation to be good 12 months from now. However, despite this positive trajectory, small business owners face clear challenges. When asked to name their most important challenge, the number one issue they report is finding new customers. That's 15% of the small businesses that we talk to. This is followed by mentions of the economy in general, which represents 12%, and in third is government regulations, which represents 10%. However, if we add those who cite health care and Obamacare at 8%, or just the government in general, which is at 6%, fully 24% of small business owners say the government is in some way their biggest challenge. Also worth noting, while many small business owners believe available credit is a major issue, only 3% say it is their most important challenge. In addition to the barriers faced by small business owners, there are also barriers facing would-be entrepreneurs. 1 in 4 Americans have thought about starting a business but have abandoned the idea. For an economy with a negative net number of startups each year since 2008, this represents a missed opportunity to engage would-be entrepreneurs that could result in business startups. 3 major barriers are keeping these would-be entrepreneurs from taking the plunge. Number 1, they prefer the security of a stable income. Number 2, they do not have enough money to start a business. And number 3, they lack the knowledge on how to start a business. Because the majority of business owners fund their early-stage businesses through personal savings, a steadily declining personal savings rate in the United States has negatively affected prospective entrepreneurs' ability to finance new businesses. Moreover, if they lack insight on where or how to begin, starting a business is even more difficult, and these prospective entrepreneurs are more likely to be more risk-averse. Creating good jobs and subsequently rebuilding America's middle class hinges on the success and failures of small businesses and startups. Existing small businesses are experiencing headwinds caused primarily by challenging business realities, the overall economy, and a concern about government regulations. Would-be entrepreneurs face barriers such as not having enough money to start a business and lacking knowledge about starting a business. It would be wise for Congress and American leadership to consider all options to unlocking this invaluable economic institution. The American public would be behind them. Other than the U.S. military, there is no other institution in the United States that the public has more confidence in than small business. Thank you.
Thank you very much. Ms. Kay, you're recognized for 5 minutes.
Thank you. Good morning. My thanks to Chairman Chabot, Ranking Member Velasquez, and the members of the Small Business Committee for asking me to testify today. As you heard, I am the president of a communications company, but I think it's also important to note that I come from a family of small business owners. My dad co-owned a small dry cleaning business. My sister and her husband own a boutique rental company in Raleigh, and my brother is an attorney. I'm also proud to be representing the National Small Business Association. As a small business owner for 27 years, I have experienced numerous economic downturns. Probably the last one was the most difficult. However, I am glad to tell you that business is booming for my company, and I am not alone. NSBA recently released its year-end economic survey, and it shows that the economic outlook is really better than it has been in quite some time. But the majority of small firms expect a flat or recessionary economy in the coming year. NSBA also held its Small Business Congress, where we identified our top 10 priorities for Congress. And the top priority is ensure corporate-only tax reform includes some kind of workable solution for the millions of pass-through small businesses. In the interest of transparency, I need to tell you my company is a C Corp. However, 83% of all small firms are pass-throughs. They pay taxes for their business at a personal income level. So it's no surprise that taxes are consistently ranked as the most burdensome administratively, and payroll taxes the most burdensome financially. Broad reform of the entire tax code is necessary, and frankly, I firmly believe that addressing just one piece of this is only going to lead to greater complexity and be at the expense of small business. You know, even in the best of times, access to capital is a huge hurdle. When I started my business, I did what a lot of business owners do. I went to get a loan, and I had to sign a personal guarantee against the equity of my house. And I have done that on a number of occasions. Years later, when my sister and her husband tried to get a loan, they encountered the same difficulties. In fact, my business and my family financed their startup. And this is not an unusual story. In fact, it's very typical. It's difficult to get credit in good times. It's even harder to get credit during troubled economic periods. In fact, in the last 7 years, 1 in 3 small firms on average cannot get access to adequate financing. Capital is the lifeblood of small business, and without it, the heart of America's economy, its millions of small businesses, stand poised to fail. In recent years, Congress enacted important tax provisions for small business on a temporary basis. They have now expired, and Congress continues to delay these extensions. So in the absence of comprehensive tax reform, extending and making permanent tax important provisions has been NSBA's priority for quite some time. Tax extenders are very significant to my business. You've all heard the saying, lights, camera, action. Well, that costs a lot of money, and we are constantly updating our equipment. In the past, we used Section 179 expensing, and it's really important that we're able to deduct the cost of an asset in the year that we buy it. Why? Because our equipment gets outdated much quicker than the 5 to 7 years that it costs to depreciate it. And it doesn't just affect my company. It affects more than 1 in 3 NSBA members. So on behalf of NSBA, I do want to thank you, Chairman Chabot, for all of your work in advancing the Small Business Regulatory Flexibility Improvements Act earlier this year. It is a very important piece of legislation, and NSBA is pleased to have supported it. But there's still a lot to be done. That's why NSBA played a critical role in developing the idea of a national regulatory budget to bring much-needed reform. Small businesses simply need the environment to grow and to create jobs. And frankly, we need lawmakers who are willing to tackle major issues that are facing our country and do it together. I began today by saying that the economy has improved, and it has. There's pent-up demand for goods and services, and potential small business owners are constantly calling me and asking about owning a small business. And while I tell them that it is great to own a small business, I also tell them about the significant challenges. It's no wonder that many people, when they look at the obstacles, walk away. At NSBA, we stand ready to work with you to help ease the burdens of using proactive solutions. Again, I want to thank you for the opportunity to speak, and I'm happy to answer any questions.
Thank you very much. Mr. Burton, you're recognized for 5 minutes.
My name is David Burton. Excuse me. I'm Senior Fellow in Economic Policy at the Heritage Foundation. I'd like to express my thanks to you, Mr. Chairman, Ranking Member Velasquez, for the opportunity to be here this morning. The views I express are my own and not necessarily those of the Heritage Foundation. After complying with the multitude of state and federal regulations that business owners have to comply with, they should have some time left over to actually run their businesses. Entrepreneurs shouldn't have to be lawyers to run their businesses. Unfortunately, that's about where we find ourselves these days. And if we want to return to sustained prosperity in the United States, we need to change that. Entrepreneurship matters. It fosters discovery, innovation, and job creation. It leads to more productive production processes that improve productivity and lead to increases in real wages. Entrepreneurs develop new and better and less expensive products that improve consumer well-being. They make markets more efficient. New firms account for most of the net job creation in the United States, and the vast majority of the economic gains from innovation and entrepreneurship accrue to the general public rather than entrepreneurs. But entrepreneurship is in decline. Business exits, as we heard, now exceed business formations. But there are many other indicia of entrepreneurial health that also indicate that we've placed an unprecedented burden on small and startup businesses. Accordingly, job creation, productivity improvements, and welfare-enhancing innovation have slowed, and the decline is an important reason for our anemic economic performance. The reasons for this decline are many-fold. One policy change or a few are not going to solve the problem, because the problem is caused by the accumulated and combined weight of hundreds of regulatory and statutory requirements imposed on small and startup businesses. The problems fall into 8 basic categories. Poor tax policies that raise the cost of capital, impose high taxes on risk-taking, and impede economic growth. Moreover, the tax system is monstrously complex, which has a disproportionate impact on small and startup firms. Access to capital, securities laws, and banking regulations and practices that limit the ability of small firms to get the capital they need to launch or grow. After all, if you can't get the capital to launch, all the other impediments to entrepreneurship are genuinely academic or moot. The healthcare system is the most costly in the world, more costly than any other OECD country. And the Patient Protection and Affordable Care Act, also known as Obamacare, imposes high costs on firms with 50 or more employees. Environmental and energy regulations raise the cost of energy, including electricity, and limit the development of energy resources. 5, the cost of complying with a broad range of increasingly burdensome and complex regulations. These rules have a disproportionate adverse effect on small firms who can ill afford to use scarce resources to comply with state or federal regulatory requirements instead of growing their business. There also tend to be the people who are least experienced in regulatory compliance. 6, we have increasingly complex and increasingly opaque labor and employment laws that raise the cost and risk of employing people, and they reduce wages and cost jobs. 7, the U.S. immigration system is broken, and it's difficult for firms to gain access to talented foreign workers and for immigrant entrepreneurs to launch businesses in the United States. And lastly, the U.S. legal system is the most costly in the world, imposing high and potentially ruinous costs on small firms and creating a whole series of regulatory risks. If we want to return to a prosperous America with opportunity for all and rising real wages, then Congress needs to systematically address these issues with alacrity. The key to reversing the decline in entrepreneurship is to systematically reduce the legal impediments to entrepreneurship. Since the decline is caused by the combined weight of many poor public policies, the solution requires systematically improving public policy in a wide variety of areas. My written testimony sets forth 97 specific proposals that I believe, if adopted, would transform the American economy, lead to a resurgence in entrepreneurial activity, strong wage increases, and renewed prosperity. I'd be glad to discuss any of those specific recommendations in greater detail if time allows. Thank you very much.
Thank you very much. Ms. Fine, you're recognized for 5 minutes.
Chairman Chabot, Ranking Member Velasquez, and members of the committee, thank you for inviting me to testify before you today. I'm Elana Fine, Managing Director of the Dingman Center for Entrepreneurship at University of Maryland's Robert H. Smith School of Business. Throughout my career in technology consulting and investment banking, I've worked with hundreds of startups and venture-backed companies and am therefore well-versed in their challenges and opportunities. To provide a little context, the Dingman Center is one of the nation's preeminent institutions where the research, education, and practice of entrepreneurship are pursued vigorously. We develop and execute curricular and extracurricular programs to inspire and equip the next generation of entrepreneurs. Our programs are focused on guiding student entrepreneurs from idea to launch. My role at the Dingman Center includes oversight of our student venture incubator, the Dingman Center Angels Investment Network, business competitions, and relationships with the broader startup community. I also serve as an adjunct faculty member at the Smith School. I've been asked to give an overview of entrepreneurial activity from a university perspective. I recognize that the macro level of activity can be hard to quantify and to really assess whether we are headed in the right direction. Based on the pop culture success of television shows like Shark Tank, the proliferation of technology incubators and downtown innovation hubs, it might seem like everyone is working on a startup. Then we look at the statistics, like the Kauffman Index on Entrepreneurial Activity, which shows a decline from 2011 to 2013, and we wonder if we're doing enough. From this perspective, a decline in entrepreneurial activity might also be seen as an indicator of an improving economy, as employers have better job prospects. As we would say in startup terms, we just don't know the metrics that matter. So I'm here today to give you a more grassroots perspective on what I see as some leading indicators of the future of entrepreneurship. We informally think about our student ventures in 3 categories. The first category is dorm room high group startups like Facebook, which, although an outlier, raised the visibility of student entrepreneurship and has inspired a generation. The next category we think about are the students starting businesses while in school that they don't often continue beyond graduation. Every year we see a panoply of new apparel companies, mobile applications, tutoring services, dating sites, and food concepts. We have seen university support increase to match student interest and demand in these activities. The data from the Dingman Center shows interest in our venture activities grew from 161 students in 2012-2013 to almost 400 students this academic year. Students run these businesses for 2 to 3 years until graduation. The company might not be a success in standard terms, but as educators, we have provided a skill set we expect will be used for a startup now or even 10 years from now. Our best example in this category is University of Maryland alumnus Kevin Plank, who ran a campus flower delivery service called Cupid's Valentine. After graduation, instead of solving the problem of expensive flowers, Plank decided to solve the problem of soggy cotton T-shirts and turned his savings from Cupid's Valentine into the seed money from Under Armour, which is now a multi-billion-dollar company employing thousands. The last category of students feed the entrepreneurial labor pool. These students aren't working on their own idea, but want internships at local startup companies. The challenge is that startups can rarely pay market rates, so they often have to forego these opportunities to take higher paying internships. All of these students represent future entrepreneurs, but I caution focusing too much on the first category. Instead, there are a number of initiatives that can increase exposure and odds of success. For example, the National Science Foundation's I-Corps program is a model of a federally funded program that could increase the odds of success among early-stage university spinouts. On campuses, we need similar programs that can build on our current momentum. These programs might provide scholarships for students or loan forgiveness so students can choose to work at startup firms. We also need more funding opportunities that others have mentioned. Without an initial $10,000 to $100,000, it's nearly impossible for a young entrepreneur who is burdened with student loans with no savings or credit to build a product and test acquisition strategies. Banks, angel investors, and even granting institutions do not have vehicles to fund these businesses. As you embark on your committee's activities, I encourage you to consider the following: seed programs that expose more students to entrepreneurial activities and equip them with the tools to vet ideas early. Recognize that failure rates will always be high, and that success in entrepreneurship can also be viewed by total births and deaths because it means there's more companies in the field. Consider programs that provide non-dilutive funding to a broader spectrum of businesses, and think creatively about apprentice-like programs and high-growth startups that might increase the entrepreneurial labor pool. Thank you for your time and opportunity to discuss student entrepreneurship. I'm happy to answer any questions you might have.
Thank you very much, and I'll recognize myself now for 5 minutes. I'll start with you, Ms. Kay, if I can. My understanding is you have, and this is according to your written testimony, you had 8 employees, yet you've had to hire 5 outside experts, from an accountant to a corporate lawyer to an HR lawyer, and on and on. Isn't that kind of out of whack? Where are we going wrong? The need for a business to expend so much of their capital and resources just complying with the law rather than the substance of what makes them profitable and able to be successful and hire as many people as you possibly can. So I'll leave that up to you to.
Well, one of the things that I always say is that as a small business owner, you wear lots of hats. You are doing everything. You're the HR department, you're the sales department, you are doing the work. And we certainly cannot be expert in all of these things. So unlike large companies that have a staff of people to do things in-house, I do have an accounting firm. I actually checked the numbers this past year, and it was a good year. We didn't have a lot of issues. The cost of it was $16,000 for a small company. Corporate lawyer, an HR lawyer, there's so many things that are happening on the HR front that it is almost impossible for us to stay up with all of the regulations. And I think it's important that you know that small business owners want to be in compliance. We want to comply with the law. We simply do not have the expertise. Mr. Burton here talked about, needing lawyers to do the things. Simply reading all of the documents and going through the forms is extremely complex. So while smart business people can be creative and entrepreneurial, we're not regulation specialists, and we need people to help us.
Thank you very much. Mr. Burton, I'll turn to you next. You had mentioned that you had 97 proposals, and that's I commend you for that. If you could limit that to what you consider to be the 3 most significant that if we could actually accomplish, that would do the most to benefit small businesses in this country, what 3? I mean, if you need 4, that's okay. If you can only come up with 2, that's okay. But I'm thinking 3 because that's usually what we do.
I'll do it, but part of the problem is it's not any 1 or 2 rules. I mean, you have hundreds, literally, of rules that small businesses have to comply with, all of which, when you look at them together, I mean, by itself, may be reasonable. But the combined weight of hundreds of rules is killing people like Cynthia. And if you just get rid of 4 of the hundreds, you've done something useful but not solved the problem. The written testimony I wrote sort of divides things into intermediate, so there's smaller chunks, and then big picture stuff. So, for example, fundamental tax reform would be in the category of something that could be transformational. But there's a whole series of small things, for example, making 179 expensive, liberalizing the S corporation rules, fixing the independent contractor employee distinction, fixing the characterization of capital versus labor income for self-employment purposes. In the securities law area, there's a whole host of things that would enable businesses to raise money, for example, preempting blue sky laws on Reg A, fixing Title III of the Jobs Act, and then protecting Regulation D so that people can raise money in private placements. There's a move afoot to severely restrict the ability of firms to raise private placements. And then there's just not piling on massive paperwork requirements in the employee-employer relationship. And there's a whole host of things going on there, the Protected Concerted Activity Initiative by NLRB, the criminal background screening rules, which, there's a reason why argument made there's a problem there, but a 157 footnote document is not guidance. It's just obfuscation, and we need to fix it and not make things totally clear. But the list is almost endless, and you need to address a lot of things, not any one or two.
Thank you. Let me turn to you, Mr. Clifton. I'm almost out of time. I got about 30 seconds. So, you had mentioned that I think the largest real category that small businesses the challenge they face is basically dealing with the federal government regulations and that sort of thing. They'd like to get new customers, but that's the highest single thing. But if you add the other things together, Obamacare, et cetera, has that been pretty consistent over the years? Do you know? I mean, this exasperation with dealing with government in general and the regulations, is that pretty consistent over time? Is it getting better or worse, or do you know?
No, it's been very consistent. In fact, just this study that the data that I shared today is actually the aggregate of what's happened over the past 5 quarters. So it's a very stable number.
Yeah, okay, very good. Thank you. My time's expired. I'll now yield to the gentlelady from New York.
Thank you, Mr. Chairman. Ms. Fine, many economists have long discussed that employer-based health insurance can lead to job lock, where employees stay in their job solely for the benefits. The ACA effectively eliminates job lock, and some have projected that it will increase entrepreneurial activity. What impact do you believe the ACA will have on entrepreneurs' decision to start a new business?
I would expect that it would increase the interest in starting new ventures because of the reduction of job lock. In general, though, I would say for most entrepreneurs, particularly high-growth entrepreneurs, if they have an idea that they're passionate about and they see a window of opportunity for, and they think that most likely they think they're going to be the next Mark Zuckerberg, whether or not they have health care probably won't stop them, but it does reduce one of the barriers, as some of the fellow panelists mentioned, about training and other things. It might be one thing that they don't have to worry about anymore.
Thank you. In this committee room, Ms. Fine, we often hear that taxes and regulations are the biggest challenges for small firms. As an actual practitioner in entrepreneurship, I wanted to ask your views on this. What are the greatest challenges facing your students as they try to get their companies off the ground?
Yeah, I will say that's not those two things are not top of mind. What is top of mind is funding, and I will echo Cynthia's comments about finding customers and just where do I find them, how do I access my network, who is really going to trust me as a small business with not much of a balance sheet, the old kind of adage that you never get fired for buying IBM. That's really, to me, those are the biggest hurdles for our entrepreneurs.
Thank you. Ms. Kay, if Congress were only to reform corporate taxes, how would that impact small businesses?
Well, I think you need to look at what it is for small businesses. I think I mentioned 83% are pass-through. And so for them, only reforming corporate tax is really not going to impact small business. And what we end up seeing, and I will be the first to tell you I'm not a technical expert. That's why I have accountants. But I see so many of the tax burdens if we don't take care of this large segment of small businesses. And as I mentioned, I'm a C Corp, so it doesn't affect me. But so many of my suppliers and customers are that I see that as a huge issue.
So closing so-called loopholes, many of which are used by small companies, such as bonus depreciation, 179 expensing. closing those loopholes are favored by many. How would this impact small businesses?
I think the biggest issue we have is uncertainty. If we don't know that we are going to be able to use, for example, 179 expensing, we are left in a position where we are unable to make reasonable decisions, buying decisions, financial decisions about our company. So what is most important to us, frankly, we would love to see those become permanent, but is certainty. That would be the biggest thing that would help us to move our businesses forward.
But if we don't do comprehensive tax reform, it means that we might have winners and losers. So for the 83% of pass-through, if we eliminate tax loopholes such as 179 and bonus depreciation, they will be losers. And how can we support having that equation where, you know, we're going to provide tax reform for some, but at the expense of others?
Well, as I said, I think we're most interested in comprehensive tax reform.
Okay, very good.
But in the absence of that, we are looking for many of these other things like tax extenders.
Yeah. My turn. Okay, so it's over. Thank you.
Oh, his time's expired. The gentleman from Florida, who's the chairman of the Subcommittee on Agriculture, Energy, and Trade, Mr. Cabello, is recognized for 5 minutes.
Thank you very much, Mr. Chairman, for scheduling this important hearing, and I thank the witnesses for their insightful testimony. I'm passionate about small business because I believe that small businesses afford opportunities to those who need them the most, oftentimes through casual encounters. Think about that young person who might have dropped out of college. Their neighbor might be a small business owner, and they might get a job that way. Think of a recently arrived immigrant who's looking for a way to get ahead. Small businesses tend to hire those types of individuals. So I want to ask a question on the EB-5 Regional Center Pilot Program that Congress established in 1992. I want to ask Mr. Burton specifically, for those that aren't fully familiar with the program, under the EB-5 program, investors are required to put up at least $1 million or $500,000 in high unemployment areas, and these are foreign investors. In return, they receive a 2-year green card for themselves and their immediate family. If the project succeeds and at least 10 U.S. jobs are created, the investors gain permanent residency. If the project fails, they lose their green cards and absorb the losses of that failure. This program is expected to sunset at the end of this year. Mr. Burton, do you have any thoughts on whether this program should be extended, or are there other programs like this that Heritage may support for entrepreneurial immigrants?
I personally think something along the lines of the EB-5 program, where you're basically allowing people who invest capital in the United States and create jobs in the United States to enter the United States lawfully, makes a great deal of sense. I'm confident the Heritage Foundation will probably reach that conclusion, but right now the institution is undergoing a review of immigration law and trying to develop a fairly comprehensive approach to it. But personally, I think that the EB-5 type approach, although there are little problems with it, and I'm not an EB-5 guru, it definitely makes sense. And I'm sure that we'd be happy to work with you to develop an approach. So.
Thank you, Mr. Burton. Does anyone else on the panel have any thoughts on it or insights onto this EB-5 program? If you don't, that's okay. I had another question, Mr. Burton. I also reviewed and listened to your testimony. I think one obstacle or barrier to small businesses is missing, and that's transportation infrastructure. We all know how fundamental it is to have a robust and modern transportation infrastructure in our country is for our economy. According to a recent report by INRIX, in 2013, traffic congestion robbed the U.S. economy of $124 billion, according to this group. Without significant action to alleviate congestion, this cost is expected to increase 50% to $186 billion by 2030. Do you have any thoughts on our nation's transportation infrastructure system, its effects on small business, and what we should do here in Congress to improve it, if anything at all?
Having an adequate freight and passenger transportation system is important to all businesses, large and small. We tend to take those things for granted until they're not working right. The Heritage Foundation certainly supports having a robust transportation network, but in general, we would like to shift the responsibility for that towards the states, which are more familiar with their local traffic and transportation needs than the federal government.
Thank you. Yes, please, Mr. Clifton.
On your commentary about the regulation that was done in 1992, one of the things that Gallup has been working on for some time now is studying what entrepreneurs look like. So when it comes to passing regulation that might force people who are not inherently entrepreneurs to therefore become entrepreneurs, might set them up for failure. And so we've been studying thousands of individuals and actually calling individuals like Ms. Kay herself, and we have found that they are very different than the general public. And so what we need to do is be much more intentional about who we are seeking out in terms of being entrepreneurs, because these rare individuals, as I mentioned, from our data, from our research, look very different. So any regulation that might draw someone to be an entrepreneur who should not be one would not be wise.
Thank you very much, and my time has expired. Thank you, Mr. Chairman.
Thank you. Gentleman's time's expired. I'm sure that Mr. Clifton didn't mean to insult anybody here. But in any event, the gentlelady from New York, Ms. Clark, is recognized for 5 minutes.
Thank you, Mr. Chairman, and I thank the ranking member as well as our witnesses for their testimony today. Today's hearing is a very important one. Entrepreneurship is the spirit from which small businesses are born. And so when we in Congress must continue to do our part to keep the spirit of entrepreneurship alive and thriving in this country. I'd like to thank the witnesses again for their assessments on today's state of the economy and small businesses. We have made great progress in the scope of macroeconomic growth since 2008, with a 5% GDP growth in the third quarter of 2014 and an unemployment rate that fell to 5.6% in December of last year. However, it is clear that there is still a lot of room for continued economic improvement, particularly concerning hourly wages, as well as the volume of smaller loans to startups and small businesses. So my first question to the panel is, household median income adjusted for inflation is hovering around $52,000, which is well above the 56.8 number from the year, which is, hovering around 52,000, which is well below the 56.8 number from the year 2000. Hourly wages for private sector employees rose 1.7% in December of 2014 from a year earlier. What can we do to increase the household median income? And furthermore, what can we do to see a more significant rise in the hourly wages for all private sector employees across the board?
Well, I have some thoughts on that. I mean,
Thank you, Mr. Burton.
There's sort of two key points to getting ordinary people's incomes back up. One is making the economy more productive, and there's a couple keys to that. Entrepreneurship, new technologies is one of it. A second piece of it is getting more capital in the hands of ordinary people so they're more productive. A farmer with a big combine is more productive than a guy with a hoe. Right? I mean, but that's true throughout the economy. So there are policies that we can take, particularly tax and securities regulation and banking policies, that will help people get the capital they need. But we also need to eliminate things. From an employer's point of view, you have costs. And then from an individual's point of view, you have wages. But in between there's a lot of costs that employers now have to bear that are not going into the wages of their employees. And we need to try to shrink those costs that aren't ending up in people's pockets. And there's a lot of ways to do that.
I can comment briefly on this just from a perspective of the technology industry. I think we know that higher tech jobs pay more, and so thinking about additional training so that we can increase the technical competence of our workers so that they will be better skilled for higher paying jobs. Just be one perspective from my experience working with a lot of startup companies who want to build technology but can't necessarily find trained workers.
Okay. Let me go on to my next question then. While the volume of loans larger than $1 million has recovered since the Great Recession, the volume of loans below $1 million has barely recovered. Small businesses and startups often seek out lines of credit that are less than $100,000. How can we work to make sure that smaller businesses that need smaller loans can actually access this capital that is critical in a startup or even transitioning phase for a business?
I have two quick specific things. One is we can enable small businesses to use peer-to-peer lending, like Prosper and Lending Club. The SEC basically shut that down for small businesses. And there's a couple different ways to go about that I discussed some in this, but I can go into greater detail. And I think that's an area where we may be able to achieve bipartisan cooperation in the Congress. And there's strong interest on financial services, I think. The second is I think you all could ask for a GAO study on banking practices that disproportionately affect small businesses. The community bankers in particular constantly say the regulators, when they audit them, are doing various things. But then when you call them up and ask for specifics, they're not forthcoming. I haven't been able to figure out what the truth is. And maybe GAO can. And I think, again, that's an area where we could have genuine bipartisan cooperation trying to figure out what are the true impediments to small business borrowing. And I'd be glad to work with the committee on that.
Thank you, gentlelady.
Thank you, Mr. Chairman.
Thank you. Gentlelady's time's expired. Gentlelady from American Samoa, Ms. Radewagen, who's the chair of the Subcommittee on Health and Technology, is recognized for 5 minutes.
Thank you, Mr. Chairman. My question is for Mr. Clifton. Mrs. Kay and Mr. Burton both put a little more emphasis on access to capital as being a significant problem facing small businesses. Do you think that your research shows that other problems such as taxation or overregulation has become a bigger impediment, or does your data suggest a genuinely improving capital access market?
Thank you for the question. Our data would suggest there is an overemphasis on credit and its availability. Most small businesses and would-be entrepreneurs start their businesses with their own money or from money that they have borrowed from a family member. The other thing is there are studies that suggest, one from Harvard, is that making too much available credit, again, can draw in people who should not be entrepreneurs. Would-be entrepreneurs are very clear about what their challenges are, and one of them is they don't know where to start. I think one thing that you could extrapolate from that is the fact that there is too much regulations for them to sift through, and any way to take that down or to help them with programs like at the University of Maryland, where there are educational opportunities to help them navigate the complex ways to start a business would be very helpful, and the emphasis should be on those things.
Thank you. I have another question for Ms. Kay. You mentioned both you and your sister have started businesses, and I'm wondering, did either of you use any of the products or services offered by SBA? Why or why not?
Actually, we did not. And I will be honest with you, I looked at SBA loans, and quite frankly, the length of time that it would have taken and the complexity of going through the process was significant. So for us, it was easier to sign a personal guarantee and take a loan against a home and be in business and do what I really love doing, which is the work of doing business. For my sister, both she and her husband, highly educated, great work history, and banks simply would not lend to them. So I don't think this is an unusual situation. NSBA has also found that what people are using is savings and credit cards, and we know that neither one of those is really a good long-term solution for starting a business.
Thank you. Thank you, Mr. Chairman. I yield back.
Thank you. So over here. Okay. Yeah. If you're ready, we can go to you now, or if you'd like to wait till the next one, that'd be okay too. Because you would be next. Okay, we'll go on this side. Okay, we'll come back. Thank you. The gentleman from Nevada, Mr. Hardy, who is the chairman of the Subcommittee on Investigations, Oversight, and Regulations, is recognized for 5 minutes.
Thank you, Mr. Chairman. As a small business owner myself for the past 20 years, I understand some of the issues that are out there. My question is, you know, I'm a firm believer that business creates business. In not all cases, but in most cases. We rely on one each other to support our businesses. So through that process, what can Congress do to maybe get out of the way, or I don't think Congress has anything to do with job creation personally, but I think what can we do to get out of the way of small businesses so they feel like they're free to invest in that entrepreneurship or expand that business that needs to be expanded or create that new one? Any ideas on that?
Well, one of the things that I think is really critical is simplicity. When you run a small business, it really is all about time and money, and we only have so much of both of those things. And anything where there is huge complexity that is involved means we're taking time away from doing business to deal with regulations or HR issues. So reducing the complexity of doing business, for me, is huge. And I know for a lot of other business owners as well. And it's interesting that you use the terminology, get out of the way, because when I spoke to fellow business owners in Michigan and told them that I was coming, several of them said those exact words. Could you tell them to move out of the way so that we can actually get work done? So anything that can be done to improve simplicity and give us certainty about where we're going so we're not revisiting issues time and time again, I think would be important.
Thank you. In many instances in your written testimonies, you've discussed overburdensome regulations. Being on that regulation oversight committee, I have a great desire to move some deregulation out of this place. Can you give me some specifics that have actual documentation where we can help somewhere along the line? Anybody?
Absolutely. I mean, there's probably 80 in my written testimony, and I'd be glad to go through them with you or your staff. But in the tax area, there's a lot of statutory changes that need to be made, but some of them are regulatory, particularly governing who is an employee versus an independent contractor, what is subject, whether income in an S corp or partnerships are subject to self-employment tax or not. In the securities regulation area, it's almost all regulatory, and there's a lot of things. There's also some things that need to be stopped. The SEC is proposing rules, for example, that on Reg D, which is how most small businesses raising capital from investors raise capital these days, $1 trillion a year, basically requiring them to file 3 forms instead of 1, and then a whole host of other obligations that never existed before, sort of the undo the Jobs Act regulation. There's that. There's with crowdfunding, a 4-page statute on the House side became a 30-page statute in the Senate, became a 600-page rule in the SEC, and that's meant for the smallest companies in America. I mean, it's just ridiculous. There's a long, long list.
My staff will be in contact with you and make sure that we
I'd be glad to
those.
yeah.
One of the other things, Mr. Burton, in your testimony, we talk about the 97 issues out there that are restricting. One of those being about the state's lands being devolved from the Bureau of Land Management and turned back to the states. As you know, in the state of Nevada, where I come from, almost 86% of our state is held by the federal government, which keeps us from having that equal footing that all other states have to be able to be independent. Can you give me some ideas of what we need to emphasize and how we can make that work and happen?
Yes and no. Everything in my testimony, except the energy and environmental stuff, I have personal experience on and can go on way beyond your guys' time limits. On that, I basically borrowed it from my colleague at the Heritage Foundation, a gentleman named Nick Galoris. And if you want to go very deep into the weeds on land management, he can help you. I know that there's a strong interest in terms of trying to reduce impediments to, primarily in the West, to using federal lands by small businesses, and they have some pretty good ideas about how to do it.
I have one other question I want to hit. This is probably for Mr. Clifton. We can have a very strong economy without, how can we have a very strong economy without job growth? We look at these reports, and we're continuing to hear that the unemployment is going down, but on the other hand, where are the jobs? Where's this coming from? Is there something different in the way we're doing reporting today than we were that's causing this effect? Because there's still hundreds or tens of millions of people out of jobs out there.
The gentleman's time has expired, but you can answer the question.
I think it was
Or whoever it was directed
The-
to.
Thank you for the question. We are not calculating the unemployment figure any differently than we have since we've been doing that in terms of the U.S. government. The challenge is the people that are working part-time who want full-time, or who are minimally employed, or who no longer are in the workforce because they have given up, are not included. So that figure that we look at today at about 5.6% as unemployment doesn't reflect the 20 million people out there that would like to have a good job. So that's the data around that. And can you have a good economy without more people that are fully employed? The answer to that's no. What would be great is if the U.S. economy looked more like states like Nebraska and North Dakota. When we look at their payroll to population, Nebraska's hovers at around 50%, and North Dakota's hovers around 54%. America's is at 44.3%. That's too low. Thank you.
Thank you. Gentleman's time has expired. The gentlelady from North Carolina, Ms. Adams, is recognized for 5 minutes.
Thank you, Mr. Chair, and thank you, Ranking Member, for holding this important meeting. Creating jobs and growing our economy is one of my top priorities, and small businesses certainly are a significant part of that equation. I have a few questions for Ms. Fine. I have been an advocate for a long time for women-owned businesses, and according to the State of Women-Owned Businesses report, my state, North Carolina, was among the top 3 with the fastest growing growth in the number of women-owned firms. We have estimated about 267,000 women-owned businesses, generating about $35 billion in yearly income. Based on your experience, how can we keep this momentum going to further increase the number of women-owned businesses, and more specifically, African-American women?
Yes, thank you for the question. I would say this is obviously something that we see, and we're trying to tackle this challenge as well because we just don't see enough women. I think a couple of things is, one is just more exposure. There aren't as many role models of successful, well-known entrepreneurs, so I think finding and celebrating those successes is very important. Second, I think is just starting earlier to address that you really can teach entrepreneurship. You can at least expose somebody to entrepreneurship the same way that you do to anything like math, science, et cetera. So I think there's a lot of great programs like what the Network for Teaching for Entrepreneurship is doing and getting programs into middle school and high schools. I think that taking some of those programs and even you're refining them even more for young women would be very important. And just having, I think in general, inspiring women to think bigger about what they can do as entrepreneurs, because they actually have a lot of the great talent and skill set that's very important to being successful.
Thank you. I was going to follow up with a question about students. I worked with young women for 40 years at Bennett College in Greensboro, but you've kind of touched on that, so I won't ask that question. But, with Facebook and Twitter and all of the access that they have that are integral to entrepreneurship, I'm sure they're using that as well. Mm-hmm. But one of the biggest challenges, and you've mentioned access, but oftentimes small businesses are really not aware of the federal resources available to them. So, or any resources for that matter. So, how should the federal government, in your thinking, or other entities work better to educate and connect small businesses to those resources that can help them succeed?
I think, obviously, I think I do put the onus of that a little bit on the entrepreneurs. Sometimes I'm a little bit surprised that entrepreneurs don't take the step to look for all the resources available. I think there is this perception that anything related to a government loan, SBA, et cetera, a patent, for example, just takes a really long time. And is a complicated process. So I think being more transparent about the processes and trying to make them faster and more efficient so that entrepreneurs don't feel they're missing a window of opportunity would be a start.
Well, and I agree with you. I'm thinking though, the federal government is a complicated kind of process, and it can be a little, I guess, intimidating in terms of applications and that kind of thing. So perhaps if we could do more, not just letting them know what's available, but how to apply and the kinds of things and the steps that need to be taken. But thank you very much for your comments. And Mr. Chair, I yield back.
Thank you. The gentlelady yields back. The gentleman from New York, Mr. Hanna, who's the chairman of the Subcommittee on Contracting and Workforce, is recognized for 5 minutes.
Thank you, Chairman. You know, it's easy to demagogue regulations, and to speak to 179, which I'm in favor of, one man's loopholes, another man's following the law, right? So what's the complaint? You find in government that in the effort at every level to control every outcome, we wind up with something that started out reasonably fluid, that turns into something that's one barrier after another, but we have no way to measure the marginal change in one's ability, or a company or an entrepreneur's ability to deal with it. But we know that structurally everything's a burden. And you talked about, Mr. Clifton talked about entrepreneurs, and some people are suited, some aren't. I'd suggest to you that the best way to figure that out is to try. And we've made it really hard for people to try. But Mr. Burton, there's a thing called the REINS Act, which I imagine you're familiar with. How do states and local municipalities, everybody has a hand in this, and everybody's making marginally some kind of a problem for the guy who wants to go in business, or lady. And I'm just curious, because it's easy to sit back and complain about government, and I'm happy to do that, but in a practical world, how do you accept the notion that some things have to go wrong in order for, if you agree with me, in order for other things to go overwhelmingly right? In other words, how do you measure opportunity versus control?
Well, three quick things. First, sort of from the business level, you're absolutely right that you have to let people fail. You have to let people have the opportunity to not succeed in their business, or you won't get the positive aspects of entrepreneurship. And sometimes the SEC forgets that. When state regulators can be among the worst. For example, Massachusetts prohibited people in Massachusetts from buying the original Apple IPO because investing in an Apple computer company was too risky. They wanted to protect their people. So there's a whole host of things. Some of the goofiest regulations imaginable are at the state and local level, not at the federal level.
There was a breakup of Microsoft, too, which made no sense.
Right. So, but I agree with you. It's easy to complain, and we need to craft constructive solutions, which is why I tried to do that in my written testimony. Specifics. What regulation? What problem? And it's one of my frustrations with the bankers who constantly say it's the regulators, but they never have any solutions. And there's two possible reasons for that on the bank credit side. One is they're using it as an excuse. It's not really the regulators, it's them. Or this, and it could be for a legitimate business reason. Or the second reason is there's something going on there that we haven't found out about. One other thing I thought I might mention is, we've talked about bank credit, but some of the most dynamic companies that are leading to huge employment gains and other social gains are the people looking for outside investors, not just banks. Right? Because banks don't invest in startups generally. They might lend to you personally, but they're not going to invest in startups. So people who are looking for outside investors and therefore running into the securities laws are the source of much of the social gain from innovation and entrepreneurship, and we need to try to knock down some of those barriers.
What do you think, Mr. Clifton?
What is the question specifically?
Well, I mean, you talk about entrepreneurs, and it's my opinion that we don't give people enough opportunity to succeed or fail, that the barriers to entry to business today are so prohibitive, and that at some point it becomes personal and other things become easier to do. People drop out of the system because they lose energy. They frankly become victims of the bureaucracy, but it's hard to measure that and understand it. And I know, I'm familiar with a number of bankers and been in business for a long time, and they would tell you that it's easier to loan big money than little money, that it's easier to avoid small entrepreneurs than it is to engage them, because they can move on and make marginally less with a hell of a lot less aggravation. So have you seen that?
Well, so I think what you're asking is, how do we quantify sort of this phenomenon about government regulations and its impact with small businesses? And that ultimately, I believe, is why I'm here. Because the way we have attempted to quantify it is by simply asking small businesses, what's the biggest problem you face today? Mm-hmm. And I think when we quantify that, we see that 25% of them, in an open-ended fashion, say back to us, it's government regulation, the government in general, or it's something to do with Obamacare or health care.
And for Ms. Kay, it would be certainty.
And I would further say that if that isn't the reality, it's at least the perception, and perception is a reality. And so that's something that maybe from a communication standpoint we would need to address.
Thank you. My time's expired.
Thank you. The gentleman's time has expired. The gentleman from South Carolina, Mr. Rice, who's chair of the Subcommittee on Economic Growth, Tax, and Capital Access, is recognized for 5 minutes.
Thank you. What a pleasure to listen to you today. It's unfortunately the same things I hear from small businesses back in my district. I was a tax lawyer and CPA for 25 years. Before I came here, I've formed or advised 1,000 small businesses. I know what they have to deal with, and these are the same problems that I've heard all along. But Mr. Clifton, you said the biggest problem people referenced was finding customers. And actually, if you look at what's happened since 2008, when the president came into office, median household income has declined 8.7%. Interestingly, in that same period of time, the pay of the average government worker has gone up 12%. But at the same time, we've had energy costs because we've put up roadblocks through EPA and war on coal and all these things. Energy costs have gone up about 10 to 20%. Food costs, because they rely on energy costs, have gone up 15%. Healthcare costs with Obamacare, some because of Obamacare, some otherwise, have gone up 15 to 20%. And so you've got this squeeze on the middle class where their incomes are down almost 10%. All their costs are going up 15, 20%. And is it really any wonder that there's a lack of customers? Because people have less money to spend. And when you see the economy going up, the stock market going up, and people say, oh, look at the economy's going great, but the average middle class family is not feeling that. In fact, they're feeling quite the opposite, and they're really the customer base. I mean, 2/3 of the United States economy is based on consumer spending. Am I analyzing that correctly, Mr. Clifton?
I think that is accurate. I mean, if you look at kind of what the root of what's happening here is the fact that real household incomes have not increased. And when we look at the data very clearly suggests that most would-be entrepreneurs or small businesses do start their businesses with their own money or capital from friends and family.
I'm not even talking about business owners. I'm talking about their customers. Their customers are broke.
I don't disagree with that analysis.
All right. Now, Mrs. Kay, you talked about uncertainty, and it pains me when you look at some of the things we do here in Congress. For example, with the tax extenders, with the 179 deduction, that is designed to be a incentive for small businesses to invest, to grow the economy, to spend money to grow the economy, to make their businesses more productive to grow the economy. How can it act as an incentive when we pass it 2 weeks before the end of the year? People don't know it even is there. So how is that an effective incentive? That's not a very good job by Congress, is it, Mrs. Kay?
Well, it certainly is not helpful. And I think when I talk about certainty, I'm not talking about next week or next month or 2 months down the road. I'm talking about long-term certainty. I'm talking about the ability for us to be able to plan a year out. And you're absolutely correct. When you wait until the last 2 weeks of a year, there are a number of people who are astute enough that they're going to take advantage of it. But for many small business owners, it's too late. And I think that what we're really looking for, and you talk about winners and losers, we understand that there are going to be some winners and some losers. I think what we're looking for is we're looking for some fairness. And we're looking for some long-term certainty so we know what the rules are, so we can make some plans. And then I think you will find that people will invest in their companies. When I talked about why people—
I only have 40 seconds, so I just want to—
Okay.
Tax extenders are just— we talk about tax extenders. We should be talking about tax reform.
We should be.
We talk about repealing Obamacare when we should be talking about how we're going to replace it. We talk about and then we have things like the Highway Trust Fund that's running out of money, and we don't know how we're going to build our infrastructure, and we put Band-Aids on it every 9 months. We talk about the Social Security Trust Fund and the Medicare Trust Fund. All these things create uncertainty in the economy, and how does that affect consumer spending, Mr. Clifton? It hurts it, doesn't it?
Absolutely.
It hurts business investment, doesn't it? So I'm glad that we here in Congress aren't doctors or lawyers, because I think we'd be sued for malpractice before it was over with. Finally, Mrs. Fine, you said that—
The gentleman's time's expired, but the chair will extend an additional minute if
Thank
there's
you.
no objection.
Thank you,
Hearing no
Mr.
objection.
Chair. Thank you. You said that we needed to do more to help entrepreneurs, and if you mean more government programs and more government regulation, I think you can see the effect of this on the economy already. I think the best thing we can do to help new entrepreneurs is, in fact, do less. Thank you very much.
Thank you. The gentleman from New York, Mr. Gibson, is recognized for 5 minutes.
Well, thanks, Mr. Chairman, and I appreciate the panelists. I think this has been a very informative hearing. I appreciate a lot of what has been discussed here this morning, and would tell you that a lot of it, as Mr. Rice mentioned, jibes with what I hear back home. Concerns with taxes, levels of taxes, complexity of the code, concern with certainty, in particular the expensing piece of it. I've heard, this morning also concerns about the regulatory state and expressions of desire of reform and relief. I've heard access to credit mentioned, all these things I hear every time I visit a small business and listen to the owners and their employees. Lower health care costs and energy costs, particularly for the Northeast. The energy costs are a concern. All of this, if we're competing, even our small businesses may be competing nationally or possibly even internationally. And so all this bearing on the problem. I appreciate being added to this committee to allow a voice for my people. And so I do have an initial question here, and just want to again reiterate, I appreciate what's been said already, because why I say that is I think you've given us more data points of where the committee's already thinking about going in terms of legislation, and so we appreciate your time, and I think it's meaningful. Mr. Burton, you mentioned 97 points. We have this one situation in our district where I've got a small business, about 200 actually, so more in the upper end of the small business, but sterling credit. And they have a tremendous relationship with a community bank, sterling record. Mm-hmm. And they had a very exciting project to expand, and they couldn't make it happen because of Dodd-Frank. And so among your 97 points, any of them address explicitly that situation and other magnification on issues of access to credit? I'll throw that one up.
Absolutely. There's a number of things. One, some of it's credit, but also they could, of course, seek equity investment. There's a lot of things in my testimony about equity investment. There's things about eliminating the artificial limitation on credit unions' ability to which would give them another financial institution they could go to. I know that I don't go a lot into it because I didn't think it was sufficiently small business oriented, more financial services. But there's a lot of interest on the part of the House Financial Services Committee on a bipartisan basis of trying to reduce the restrictions on community banks, which might help. Peer-to-peer lending is another opportunity, and there's two different ways to do that: either fix Title III of the Crowdfunding Act with respect to debt securities, or create a new regulatory regime so organizations like Prosper and Lending Club can lend to small businesses without having to use banks as intermediaries, in effect go around the banks. So there's a lot of things that can be done.
Well, thank you, and we're listening. And I think some of these things we're already looking to move on, but that's helpful. Last question here, and it's really one I'm curious of your feedback. Last Congress, we worked together, enacted a bipartisan piece of legislation that helped with job training. And explicitly, I'm now thinking about my small business owners who are, especially manufacturers, that were very frustrated with their new recruits and their lack of preparation for some of the work that they want them to do. So the intention of the new bill was to try to address that, bring closer this activity that often leads to either a degree or certification and individuals who are going to start working, because we know there's going to be activity to get a degree or certification. We want it to actually be meaningful. So more internships. Is there any feedback for us yet on this new law? Or is it too early?
I'm not sure personally.
I mean, from our data, that would suggest that is the right direction, because you have such a large percentage of would-be entrepreneurs that are asking for help in terms of how to get started. But I think it's also the signal of another thing. And so when we look at what's crossed in terms of business deaths and business births, is that another thing that might be happening is sort of this decline in the spirit of free enterprise. And there are numbers of conversations in terms of leadership within the government that are looking to young people, such as forgiving their school debt, their loans, if they come to work for the government. And so there's nothing wrong by that, because what we are doing is celebrating the heroes and the sheroes that want to get into the government. But what it fails to do is we're not sending the strong enough signals that there are those heroes and sheroes that will start the big next businesses that will create the jobs that will restart this economy.
Yes, good point. And my time has expired, and so I'll yield back. Thank you.
Thank you to the gentleman. Now I yield to the ranking member, Mrs. Velasquez. She has a couple of additional questions.
Just two more questions. Mr. Clifton, I just would like to ask you, what percentage of survey respondents are would-be entrepreneurs? What percentage are startups in business less than 3 years, and what percentage are existing business older than 3 years?
Those data are available from the Small Business Administration, but I think I might be able to provide a data point that's more helpful.
For the survey the Gallup survey.
We interview 600 small businesses per quarter with Wells Fargo. We pull the list from Dun & Bradstreet, and the weighting scheme that we do is based on their revenue and their location.
So you don't have a breakdown in terms of would-be entrepreneurs. What percentage are startups in business less than 3 years, and which percentage is those older than 3 years?
Correct. We don't collect those data. They're available from the SBA. But I think a data point that's even more helpful is our analytics suggest that the percentage of people that have the rare talent to be that sort of incredible Wayne Huizenga type that could start 3 global Fortune 500 companies, we believe it's somewhere 3 in 1,000 people that have that inherent talent.
None of your of the businesses would be in your survey. None of the 600s would be entrepreneurs.
Correct. That's a separate survey that we do, and 25% of Americans said that they have seriously considered.
I am confused because the focus of the hearing is on would-be entrepreneurs and what hinders business creation. So I don't know if my next question has any basis, but in your opinion, is the Gallup's poll a good measure of the top challenges for startups, or more challenges facing existing businesses?
In my opening remarks, I addressed both. And they have
But
different...
yet, in your sample, you don't have any would-be entrepreneurs.
No, that's not. So in my opening statement, I had addressed that we interviewed 25% of Americans that said that they were would-be entrepreneurs, and they faced 3 significant barriers in order to start a business. So yes, I addressed both separately.
So, Ms. Fine, in your work with entrepreneurs, how much do you hear that regulations like those from EPA, OSHA, factor into the decision of whether an entrepreneur starts a new business?
Like I mentioned before, I mean, we work with startups, entrepreneurs at such an early stage of their business. These are all, like we would tell anyone, these are all regulatory forces that they have to investigate, and I think it's more of understanding if the business model works given those regulations. So they have to go look at those and understand it, and that's a part of the discovery they need to do, and I would count that as part of them starting as entrepreneurs. So it doesn't keep them from starting that process necessarily, but it might keep them, based on what they find, from figuring out if they have a viable business model.
Thank you. Thank you, Mr. Chairman.
Thank you, Mrs. Velasquez. Mr. Burton, I want to ask you, maybe you're not the right person on the panel to ask this question, but do you think that the Dodd-Frank banking law prevents a community bank from making loans to small businesses that they would otherwise make?
I think aspects of the Dodd-Frank Act clearly reduce community bank lending to small businesses.
Okay.
But I'm not sure that's the central problem.
Okay. Mrs. Kay, same question to you.
Will you yield just for a second? It's on the community banks and Dodd-Frank.
Sure.
Yeah, I serve on the Financial Services Committee, and so I was there when we were working on the legislation. Do you know that community banks who have assets of $10 billion or less are exempted?
Yes, and that's one of the reasons why I said it wasn't necessarily the central problem. There are other aspects of Dodd-Frank that are problematic, but again, in terms of small business capital formation, I'm not sure Dodd-Frank is this biggest problem we have on access to capital.
Mrs. Kay, do you think Dodd-Frank prevents community banks from making loans to small businesses that they would otherwise make, that they deem an acceptable risk, but they would not make it with the Dodd-Frank banking regulation?
I would love to answer that question, but I am really not qualified to do that.
Same question to you, Mr. Clifton.
We don't have data on that specifically.
Okay. All right. Thank you very much. Look, this has been a wonderful hearing. Y'all have done a great job of educating me. Thank you so much for taking your time to come here to Washington to explain your perspective on the challenges facing small businesses today. I really can't thank you enough. And with that, I ask unanimous consent that members have 5 legislative days to submit statements and supporting materials for the record. Without objection, so ordered. This hearing is now adjourned.